Hello learners, welcome to our session today again. I'm your instructor, CPA Aringo Frederick, and it is a continuation of what you are doing. So remember, in our previous class is just a continuation of employment income, and at this point you are looking at an untaxable benefits. This is what we did in our last class. So in our today's class, my good students, I want us to talk about tax credits. I want us to talk about the tax credits. And by the time you are done with the tax credits, we should be very good in handling any question when it comes to what? When it comes to employment income. So talk of the tax credits, tax credits. Ideally, when you are talking of the tax credits, what should click at the back of our mind? So whenever you are talking of tax credits, what should click at the back of our mind? So we are saying that we are talking of tax credits, a very important concept. Tax credit. Actually, it is from also on the same class that you are going to look at the current rates. We are going to look at the current rates for employment income. These are the rates for 2020. And you being a 2021 students and probably going forward, you will be required to use these current rates unless they are changed again. So looking at the tax credits, first of all, what should we understand by this term tax credit? So for tax credits, again, you normally say that these are deductions or set of taxes deducted from gross tax liability to determine the tax payable. I repeat, you are saying that these are deductions or set of taxes deducted from gross tax liability to determine the tax payable. Meaning that at any given point, you never be talking of tax credits. Ideally, you'll find that these, we're terming them as deductions, which of course they are going to be deducted from gross tax liability. So if I was to have a tax liability, or if my tax liability gross maybe was say like 100,000, any item that will tend to reduce this gross tax liability is what you are terming it as what? As tax credit. And at this level, tax credit will be looking at it. Number one, tax credit that we normally talk about, which is very common. We normally talk of withholding taxes. And of course, these taxes ideally are withholding taxes on non-qualifying, remember, you are looking at an individual of non-qualifying dividends income, non-qualifying dividends and interest income. And I can clearly recall when we are looking at withholding taxes, actually we did this amongst our taxation of other sources, whereby we had talked of interest income and we also talked of what? Investment income. So by now we should be very good in understanding the concept of withholding taxes. Number two, which ideally this is so very key, and remember this one has changed, and I think we can look at that as number three, but right now we can talk of insurance relief. Insurance relief, this is life insurance relief, life. We normally look at it in this case, we normally compare 15% of the premiums, and we compare with 60,000 shillings. Whichever is higher is the amount that we normally consider as what? Whichever is lower is the amount that we normally consider as what? Is the amount that we normally consider as relief. Assuming, my good students, you are saying that maybe my premium, total premium, assuming is say like 100,000. So I should be talking of 15% of 100,000, which ideally would give me roughly 15,000. I compare that with 60,000. whichever is lower on the two is the one that I'm going to take as our relief. In our case, you can see I'm having what? 15,000 being lower of the two. So that is the amount that I'm going to take as our relief. That's the amount that you're going to take as our relief. Now, after we've talked of that, that should bring us to number 3. That should bring us to number 3. That should bring us to number 3, which is also very important. And by the way, these tax concepts are usually very practical. So the moment you're approaching them, I want you guys to approach this concept with an open mind. And also for employment income, ideally even what you'll be preparing towards probably end of each financial year, where we are talking of P9. P9 forms, ideally they are usually generated using the same concept that we are looking at here, the aspect of employment income. So approach this unit with an open mind that this is a practical unit. It's not only for exams purposes. And if you approach it in that manner, you'll find that it will be very, very simple for you. Even when you'll be going, maybe even when you'll be applying it practically, you'll find that the concept will always be very simple for us. The concepts will always be very, very simple for us. Now, looking at this relief or tax credit number 3, we are terming it as personal relief. Personal relief. I know by now we must be very good in understanding that it is only residents who are always given what? Personal relief. Any non-resident will not be granted personal relief. And we had explained this one earlier on. We had already explained this one earlier on. So for personal relief, initially it was 1408 per month. But the current rates, we are talking of 2,400 per month. So this was 2019 going backwards. Current rate 2020. We are talking of what? We are talking of this is a per month, which this one will translate. Initially, it was translating to 1408 by 12. Initially, it was translating to 16,896 per month. But the current rate now, this one will translate to 28,800. This will translate to 28,800. So this is a very important concept that you must always grasp, more so if you are doing exams in 2021 and beyond. You should be very familiar with the new personal relief. Don't cram. Always understand that we are talking of 28,800. And the beauty part of it is that these concepts, ideally, the examiner will always give us. The examiner will always give us in our papers. So this one should not give you a headache. What you should just understand is that currently our personal relief is 28,800. Currently our personal relief is 28,800. Now, after we've looked at that, ideally I'd also want us to talk about our new graduated scale rate. New individual, this is a individual graduated tax scale rate. Remember, this one was also adjusted in 2020. So whatever that we'll be using, of course, in our exams for 2021, ideally, this is in relation to the data that we had in 2020. So also I want you to understand this concept of graduated scale rate. So the concept ideally is just the same as what you were doing earlier on. It's only that this time round the tax bracket have changed. So in that case, we normally look at this bracket. This will be our current. This is our current bracket. So 288,000, 288,000. Allow me to have 288,000. In this case, usually at the rate of 10%. 288,001 to 488,000 at the rate of 15%. That should be at the rate of 15%. Then of course 48,000 and above, that should be 48,000 and above. So in this case you are talking of 48,000 and above. Just confirm here. So we are talking of this bracket would be 488,001 to around 688,000 to 688,000 to 688,000. We normally talk of 20%. Excess of 688,000, excess of 688,000, that is at the rate of 25%. That is at the rate of 25%. So basically, my good students, we are saying that this is what we'll be using as our current rates. This is what we'll be using as our current rates, whereby we are talking of excess of 688,000, talk of it as at the rate of 25%. So how do we normally use the graduated scale rate? How do we normally use the graduated scale rate? So in this case, we normally look at any person earning an income between 1 to 288, it will be taxed at the rate of 10%. This ideally will translate to 28,800. Then any person earning an income of in between 288,000 and 488,000, of course, he will be subjected on the first bracket. Then on the second bracket, this is what we'll be having. On the second bracket, I should be having, I'm going to take 488,000 minus 288,000. So that should give us 488 minus 288. We multiply by 15%, that should give us a figure of 30,000. Then talk of the next bracket. Again, of course, I'm having 200,000 times 0.2. That should give us a figure of 40,000. That should give us a figure of 40,000. So any amount in excess of 608,000, that is going to be given, or rather is going to be taxed at the rate of 25%. Meaning that we can clearly agree that the first 688,000, first 688,000, the taxable amount will be how much? 98,800, right? If we sum it up, 28, 30, and 40. So I'm talking of 98,800. The first 688,000 is 98,800. Alternatively, a smart student could also have done it like this. You could have determined for the first, the first to 88,000, I'm having it at the rate of 10% to give us 28,800, right? Then I'm looking at the common difference in between 488 and 288 and 688 and 488 is 200,000. So I'm going to take 200,000. By what percentage? 20% plus 15%, that should give us 35%, right? So I'll be taking 200,000 by 35% to give us a figure of 70,000. So that as at the end of the day, if we add, again, I'll arrive at 98,800. I'll arrive at 98,800. So remember, this is a scale as at 2020. And this is the one that you are going to be tested with in your exams for 2021. So if you are able to master this scale, you'll find that this concept will always be very, very simple for us. It will always be very, very simple for us. So in this case of ours, my good student, assuming I'm having this individual who's receiving 100,000, or rather say like 1 million. I'm having this individual who's receiving a figure of 1 million. How will we treat it and how will tax credit come into place here? So we are assuming that this person is earning 1 million, right? This person is earning 1 million. So I know very well that this person will fall under this bracket. He will fall under this bracket, and of course he'll also fall under a bracket of excess. So how will I determine the tax payable by this individual? I'm having the first 688 to be given 98,800, which I believe you can clearly recall how we determine it like that. Now excess of 688,000 will be how much? I should be talking of 1 million, right? Minus 688,000, correct? By 25%. So that case I should be having 1 million minus 688,000, right? By 0.25%. So you should be talking of 78,000. 78,000 plus 98,800. We should be talking of 176,800. So this is the amount that this person is supposed to pay. This is the gross tax liability. Gross tax liability. But if this individual was a resident, right, we are going to give him a personal relief of how much? 28,800. So this is where our personal relief will also come in place. Personal relief. So for personal relief, we can clearly say that I'll be talking of 176,800 minus 28,800. So therefore I should be talking of minus 28,800 to give us our net tax liability of 148,000. So you can clearly see how we have applied the concept of tax credit, where in this case we'll find the tax credit will assist us to reduce our gross tax liability, So after looking at this case, my good students, I'm not seeing any other thing that might tend to hinder us now to tackle any question when it comes to employment income. I'm not seeing anything that might tend to hinder us to tackle any question when it comes to employment income. So I want you to join me in the next session whereby we are now going to handle a concept in relation to what? The format of employment income. After we looked at the format of employment income, we can now proceed and handle a full question in relation to what? In relation to employment income. So to this juncture, thank you so much, and let us meet in the next session.